Hey everybody, this is Jose Blasco. We are about to start. Can I have a quick confirmation from you guys? A quick message on the chat box. I'm looking to confirm that sound is good, that you hear me well. So a quick hello would do. A quick hello on the chat box, and that way I know we are ready to start. Thank you so much. 15 seconds to go. Almost time to begin. I'll turn on my video stream in the meantime so I can say hello here from the bottom right corner of the screen, and I can see sound is good. Thank you very much, my friends. We are live. Welcome to the session, everybody. Today is December 3, 2020. Today is options with options. So as the name suggests, we're going to be looking at the different ways on how to do options trading, depending, of course, on the market opportunities that are available. We are not the boss in trading. The market is the boss. So if the market allows us to do certain type of trades, we'll go for that. If the market suggests to do another type of trades, we'll go for that. The beauty with options is that we have tools to be greatly adaptable to the market. And therefore, today's session is likely going to be powerful and enjoyable. Hopefully, that's the case. So thank you very much for joining me. Before we start, you can see the disclaimer on the top of the screen. So I'm just going to highlight it so you can go ahead and read it carefully. Please, this is important information. Make sure you read it completely. Don't read it partially. It's really a couple of paragraphs only, but it's important for you to be well informed and well aware of the risks attached to financial trading, which obviously there is money involved apart from our human psychology and many other aspects. All of this equals risk. Very well. So I would say the session is now officially introduced. How are you, Leland? It's very good to see you, my friend. Not sure if you are in Kansas City there with the guys, but if that's the case, hello to all of you guys. A pleasure. Let's begin the session, everybody. I'm going to close the introduction slide so we can jump into TradeStation and begin. Here we go. Perfect. Okay. So as always, our session is going to have three parts. The first part, I want to take a look at the S&P. I want to take a look at the VIX, see what's going on out there. We'll make a few comments about that so we understand the market conditions, both from a directional point of view as well as from a derivative point of view, understanding the prices of those options. Are they overpriced, underpriced, or anywhere in between, and therefore which are the most logical opportunities for us to identify. The second part of the session is going to be about looking at about trades that we have running at the moment. We have Roku, Tesla, and Intel. So we'll look at those three trades and make comments about it, especially if you are in those trades. I believe that you will appreciate such comments from a trade management point of view. If you are not in those trades, reviewing those trades will help you understand better the trades I am about to plan, which will be the third part of the session, which is when I get into finding new market opportunities. Okay, so anyway, so from a market point of view, from a S&P 500 point of view, equity markets. So notice, let me zoom in here. Notice that we are in a climate which is an up climate. So thick dot and blue. The climate has been running for 9 candles. Statistics suggest that 10 is a normal thing. So 7 out of 10, certainly there is still room for the market to continue moving to the upside, even though anything could happen anytime. Really, it is more likely for the market to continue moving to the upside for a little longer before we have some sort of a retracement or correction. The last time we had a retracement or a correction, it was, quite minor, if you wish. It was nothing that impressive. It translated into our auto climate with an unconfirmed climate in the opposite direction. That was the pause the market gives us. Okay, after some level of extension, we had a little bit of a pause to restart extending again. And again, 7 out of 10 means that we still have room for a little more extension in this particular move. Okay, the fact that we have green UFOs below price also kind of confirms the same statement I just made, which is the market is more likely to continue moving higher than lower, at least for a few more days. And this is something important for you to know, especially if you are running a portfolio with multiple trades, as I always suggest, where some of your trades are long, some of your trades are short, and therefore you have some offsetting built in your portfolio. You have some hedging built in your portfolio using some stocks against other stocks. With the beauty of options, you can do that with positive gamma. And if you don't know what that means, I would suggest that you go ahead and you watch in our sharpening playlist on the YouTube channel. You go ahead and watch a video I did on gamma. Look for gamma, and you will learn a lot in that video if you don't know what gamma is or what I mean by that. But again, the fact that the climate is up so tells you that a smart portfolio building technique would imply that you would be exposed to a greater degree to the upside and exposed to the downside with a lesser degree, just as a hedge. But you don't want to have too many stocks that are pointing to the short side, given the fact that the climate is telling us that the market is more likely going to continue moving higher, at least for a little longer. Okay. So keep that in mind, and of course, anything could happen anytime. And if that's the case, we'll have a change of climate, and then we'll change our exposure and our stock selection and everything else. Okay, but this is what we have as of now. When it comes to the VIX, okay, which is the implied volatility for the S&P 500 options. So let's see where we're at. We are trading at levels of 20, 21. So options, of course, got way cheaper after the election. We hit levels that were about 40, 38, 40. Now we are trading at 21. This is way less premium built in the options, which is kind of copy-paste from what we saw last week. And basically that translates into multiple non-directional opportunities, but not too many, and also multiple directional opportunities, but not too many either. Okay. Why is that? Well, because options are not that cheap, options are not that expensive. So really, it makes sense to look for opportunities for all of it, opportunities to sell options, opportunities to buy options. Certainly, it makes a lot of sense to find all of them. Now, having said that, it's probably not going to be too easy, okay, to find plenty of those opportunities. Okay, why? Because given the fact that options are not too expensive or not too cheap, so the amount of symbols we will get after running the scanners is going to be a limited list. Okay, with not that many. And on top of that, as a trader, we know our job is to discard trades more often than accepting trades. So in other words, it is very typical in a situation like that, when the market is where it is right now, that maybe you spend 20 minutes, 30 minutes looking at market opportunities, and basically you have no go, and you end up the day with no trade to be executed now. Maybe 2 hours later you check again and you find one or two. But again, I'm not expecting today or in the current type of market conditions that every time you load a chart, you have a trade ready to be taken. I'm expecting many no-goes and way fewer go-aheads. Okay, make sure we understand that, because if you don't understand this particular market condition, you may fall into frustration because you start looking at charts and every time it's like, oh, it's not meeting my rules, and next thing you know, you find an excuse to break the rules and start forcing trades because you kind of lose your patience. Okay, so make sure that we are at times where, the job of a trader is to be picky and be selective, but at this time, not only we have to be picky and selective, it may actually be a bit more challenging than in normal times. And in this sense, we gotta be patient and disciplined and diligent to do what we are supposed to do, instead of just improvising and do whatever. Okay, so make sure that we keep all of this in mind, and our approach to trading is impeccably professional, so we don't make those novice mistakes, which again, based on human emotions, and especially if you have limited experience in trading, these market conditions may challenge you, and it's easy to make those mistakes. Okay, so discipline and patience, it's needed in times where, in one hand, it's looking like the market is going to the moon, but in the other hand, that makes the options very cheap. At the same time, because the market has moved a lot, many opportunities are probably late to the party. And again, we gotta be patient to look for the right trades. And our job, if you wish, would be to every day or a few times a week, find these 1-2 trades and just keep adding to our portfolio. So we end up through time having always in our portfolio a few trades pointing north, a few trades pointing south, long and short with positive gamma, and then a few trades to be non-directional, either non-directional trades like iron condors, or partially directional or neutral type of credit spreads or other combinations. Okay, so again, keep that in mind. Okay, important point. So with all of this said, now we understand better what we have in front of us from a market condition point of view. You guys have been very silent so far. I would appreciate a quick feedback, I'm with you, Jose, or Jose, I don't understand that. Do you mind repeat? Anything. Just give me a little bit of feedback, even if it's just to say I'm with you, I'm okay, all good. I would certainly appreciate that. While you're doing that, I'm going to move to the trades that we already have running. So I'll start looking at Roku. So Roku is a trade that we executed on the 12th of November. The trade actually was filled on the 13th. That was the day after. Earnings are happening in February, so we got plenty of time to go. Now, of course, time will be set and limited based on our expiration date, which is January 15. Okay, and therefore the idea is to stay in this trade as long as possible. Roku is a stock making all times high. Therefore, there is no target in this trade. We are just following the stock. And talking about following the stock, the last time we met, we decided to trail our stop to be 268. Okay, and again, it's not like we have a stop. It's going to be more of an alert. So if that stock was to fall and hit 268, you will want to close the trade and collect a very, very nice profit, like a $40 profit on the stock, which is pretty nice. But the thing is that today, as we speak, a new UFO has been formed, okay, located at 280. So I'm going to go ahead and use 280, run number 280, to move my trailing stop line. Again, I'm calling it trailing stop as an analogy with stock trading or futures trading or forex trading. Here is not going to be a stop, really. It's going to be an alert. Okay, so actually I recommend you to set the alert on TradingView, since the alerts are held on the server side. And that way, even if your computer is off, you will be alerted if that stock reaches 280. So then you can go ahead and at your own pace. I would say there is not that crazy, massive, critical need to rush, but certainly as soon as you can, you will want to go ahead and close the trade and be happy with the profit made from 227 to 280. This is a fantastic, really, really beautiful profit. I would say one of the best trades of 2020, actually. So hopefully you are in, or even if it's a trade that you took simulated, hopefully it's a good learning experience. Okay. Good reminder. I'm with you. Very nice, guys. Very appreciated that you guys are coming back to me with feedback. This is really, really appreciated. Tesla is another trade that we have in. To be honest, last Thursday when we conducted the session, the market was closed. It was Thanksgiving Day, isn't it? So I did plan the trade and I did ask you guys, next day, Friday, the market will be open until 1 p.m. So as a homework, you guys go ahead and check those two setups, December 31 expiration and December 18, looking to build a credit spread. And based on my experience, there was going to be premium enough to do this trade, especially given the fact that we can see that price went down aggressively. So I am telling you, I am 100% positive that those trades could have been filled. I didn't do it myself because, that day from a trading point of view, I did not trade on the last Friday. So then I was not able to do it or manage it myself. But if any of you looked at those particular credit spreads, again, I am very, very much positive that those trades were filled, especially with the very intense move down that took place at some point with Tesla. Okay, so in other words, you are in a trade either using December 18 or December 31st. Okay, and in both cases, okay, we were using the same, 445 strike. Okay, 445 strike. Which is located more or less here for 43.63, isn't it? And therefore, we are betting that from now until December 18, the stock will remain above 445. As long as the stock is anywhere, even if the stock was to fall and be somewhere here, even though it's a huge drop from 585 to 440 something, to 460, for example, it doesn't matter. This trade will end up in a profit because it's a credit spread. And you make money on time passing, not on the direction in this case, unless you go below 445, where now you start losing. Okay. So we'll be monitoring this trade. Again, I won't be able to show you values because I didn't take it. But since the setup was discussed in the sessions, I would expect, or I would think that some of you may be in the trade, so I will be discussing it. And the last one that we're going to check before we get into planning mode is a trade with Intel. And this trade with Intel, I'm going to have to switch to the weekly time frame because this was a trade that was taken for long-term purposes. This was not a short-term trade. So this trade was taken on that particular week, on the week of 11/6. This was a trade that we put in place to take advantage of the excess of volatility that took place right prior the president election. And what we said is that we're going to get into this trade. What we did there is that we sold 2 of the 40 puts, we bought 2 of the 35 puts, and we took this credit that was a credit of whatever amount of money, and we bought the 50 call, which created a trade that was a credit of $60. So we did this trade for a credit, but the beauty is that because we got a long call, this trade actually makes money on direction. If the stock was to fall, you would be put the stock to you at 40, which was a price we were very happy with since we got UFOs at 40 in the weekly time frame. That was going to be a very good buy for a long-term investor. But guess what? Even better than that, the stock started moving very, very aggressively since then. And that one, I do have it on the option chain. So let me show you that. Because this trade is indeed a very, very profitable trade. And by the way, some trade management action may be required. And therefore, I would like to point at that so you guys can see. Okay, so I'm just going to load INTC. Okay, Intel Corporation